Good morning, everybody. We'll give everybody an opportunity to join. I just figured out, by the way, I went in there because I haven't set these calendars or anything. Jenna's done it, but I went in there to try to tweak the calendar for an 8:28 start, as I mentioned yesterday, and I can't figure out how the heck to do an 8:28 start. It's on the fives, so kind of is what it is. Overnight headline, I would say, of the day is, and this potentially affects Bank of England and maybe even ECB rate decision over in the GB. Again, another round of below expectation inflation, PPI. Revised from 9.3 to 8.7, came in at 7.3. CPI missed by 0.2. Monthly printed at 0.1. Just and they print a lot more numbers than we do. Just a lot of really good stuff that kind of takes the next rate decision, which I believe is on the 31st, next Friday, into question. Here onshore, it doesn't impact interest rates, but refi's down about maybe 5% or something like that, to 3%. Purchases up a little bit, net. Actually, the index is up month over month. Let's see where we are right at this second. 264 on 10. So we are 11 basis points above where we sat when oil was doing well. We're opening a tick, 2 ticks worse. Reasonably in line with yesterday. Gun to my head, I would say we're maybe 2-3 ticks worse than when rate sheets printed. Not kind of had a sense that maybe we might bounce this morning. No such luck, as it were. Just at some point, you bounce because you're at, theoretically, you bounce because you're at, I know this is not going to be scientific, but it works out more often than not, unless there's some real, kind of overarching reason to continue in a particular direction, which I don't know that there is here, and especially given conflicting information. But, it's one of those things where, you bounce just because you've sold off X days in a row and you're at support. Didn't happen this morning or yet. If we take a quick look at the markets, in Asia, mixed. Europe mostly better. Futures are worse here onshore. Flattish. NASDAQ leading the charge, indicating down a point. VIX is up about 3%. No surprise. I mean, crude is actually approaching a 90 handle at this point, and is actually priced higher than Brent, and that hasn't been the case for a while. But other than copper, commodities up pretty much across the board, 87 and change on crude, just under 85 on Brent. So there's your pressure on rates. Dollar mixed against most other currency. Bitcoin down a little bit. So good morning, Bob. So, long story short, and I don't think we have any 8:30 data, and we don't. There's not a lot of data-driven motivation today to trade. Just sort of waiting for good news out of Iran. A lot of flight closures, particularly United out of the tri-state area. Don't know what was going on. I had some friends coming down today, 2 separate ones. Both their flights were canceled, and it all seems to be United related. I don't know. There was a request for more funding for the Iran war. I guess we're calling it a war at this point. I thought it was a conflict. So, not great news there. I guess if you're hoping for lower rates, you're hoping for them to get to the table. In the meantime, and no pun intended, but the price of oil and gas and the conflict in Iran is trumping this clear, continued, consistent weakness in the data, both onshore and globally. And I think that the $1 million question coming up over the next 2 weeks, because there's really not a ton more data this week, couple little things, obviously claims tomorrow. One would expect that we're not going to see a sub 200,000, and it's been a while since we have. So maybe a little popping claims helps us. I think that weekly ADP number was the lowest print in 5 months or something. I was just looking at a lot of the data from the last week, and same with these. Let's see, the UK inflation. So just sort of reading this headline, inflation rate fell to 2.6 in June, down from 2.8. While this drop is driven by lower motor fuel and food costs, it brings the rate to a 15-month low, but remains above the Bank of England's 2% target. So I'm seeing more of that. Worst level in 5 months, worst level in 15 months, worst level in a year. That's creeping back in. Consumer price indexes, including owner-occupiers, housing costs, CPIH, also slowed, dropping to 2.8 for the 12 months to June, despite recent cooling. Experts anticipate, and here's the problem, the catch, anticipate that inflation may temporarily rise over the summer due to a hike in energy prices that took effect in July. Now, July's not over, and we'll see. We know that the price at the pump, for example, goes up a hell of a lot quicker than it comes down. But I think if we're hanging our hat on anything, right, it's that a lot of this data is coming with, and I don't know if asterisk is the right word, right, because that oftentimes asterisk sort of suggests a but, right? And this is not a but, this is more of an and. Is this data point was this, and it's the worst level in X. That is an incredible departure from where we were April, May, let's call it. So, what will be really interesting over the next 60 days is if we can get to the point where there is a true conclusion to this conflict and this data continues to worsen, things could get sort of sketchy in a hurry. And I would, sort of suggest go back and look at the last 2 Septembers. I mean, there was a pretty violent and precipitous drop in rates mid-August-ish, September. And absent of this conflict, we're really lining up for that again. So I don't know. Is it going to end? Your guess at this point is as good as mine. So anyway, if you have a question, pop it in real quick. Otherwise, as always, thanks for joining live. Thanks for watching on replay. Oh, how do I trade this? Really, I mean, it's just rinse and repeat, right? Slightly less value in 6 and 6.5 coupon, i.e. 6 1/4 and up, but the value is still there. 5.5s are a 50-50 proposition. 5 3/4, 6 1/8 note rate, and 5 5/8 and below. You're talking, you're at 2-month worst levels, give or take. What's the point of locking here if you took on unnecessary risk? Probably not a lot of motivation, and you're just sort of waiting for a little bit of a bounce. I mean, should 10s be at 464, Freudian slip there? I mean, I don't see it. They weren't at these levels when we had 8% CPI. So not to sound like a broken record, but what if any risk that you take on, it should always be under the sort of the strategy of lose small, win big, and we are, and just can't imagine breaking below or breaking through this pivot again. I just don't see it. One conventional wisdom would suggest, based on the underlying data, that there's more to gain than there is to lose on note rates 5 5/8 and below right now. The same would be suggested for 5 3/4 to 6 1/8, 6 1/4. But there's less to gain. And then 6 1/4 and above, there's not a hell of a lot to gain, quite frankly. And that's where potentially there's, your risk and your gain are somewhat equally weighted. So bulls and bears make money, pigs get slaughtered. Have a great day. See you guys tomorrow.